Welcome to Tax Liens University. This is the second video in the Tax Liens University YouTube channel. In the first one, I told you welcome to Tax Liens Investor. At that time, I was thinking about calling my channel. I was thinking about calling this channel Tax Liens Investor, but I changed my mind. That video I took yesterday. After I recorded the video yesterday, I have decided to name it instead Tax Liens University for a couple of reasons. First one is that it's the Tax Liens University title is closer to what the channel will be about. It's about teaching you how to invest in tax liens and hopefully make money in tax liens, even though if you've done the homework I gave you in the first video, you know by now that most people who try to make money in tax liens actually lose money. By the way, these videos are not meant to be seen in a random order. You have to take them like a university course. You have to watch them in the order they are numbered. Today is Monday, January 8th, 2024. I'm very busy with investing in tax liens in January, February, so I may not get around to numbering them correctly. So until I get around to numbering them correctly, just look at the upload date to know which ones you're supposed to watch first. Watch them in the order they are uploaded. If you watch them randomly, you will get some benefit, but you will lose at least an order of magnitude of the benefit you can get from the YouTube channel by watching the videos in the order they have been uploaded. In his book, Stephen Covey's book, The 7 Habits of Highly Successful People, the first habit is begin with the end in mind. So today's lecture is mostly about what's the end goal. Why are we bothering learning about these tax liens investing? Especially since I told you in the first video that I don't recommend tax liens as a way to get good return on your money. You can get good return if you compare to the bank, but you can get much better returns on your money, at least in terms of any way you look at it. You can get much better returns with less risk by buying discounted mortgages than tax lien certificate if you are buying tax lien certificate for the interest and penalty return. So if you learn how to invest in tax liens for the interest and you stay there, you'll make more money than people who invest money in a bank CD, assuming you do it right and you don't lose money, like the vast majority of people that you found out in your homework. And if you haven't done your homework, you may want to pause this video, click on the first video, and like most lectures where they give you the homework at the end, actually give you the homework at the beginning, because the homework is much more important than listening to me, listening to what I say. If you take two people, two identical twins, same level of education, same IQ, same everything, and one listens to all of my videos from beginning to end and doesn't do the homework, and the second one listens just to the first 10 minutes until I give you the homework and then stops and just does only the homework and doesn't listen to what I say, the second one who does only the homework will get more benefit from the course than the one who listens to everything I say. So it's really important that you do the homework. It's even more important than listening to me. So why bother learning about tax lien investing if there is a better way to get a good return on your money than investing in tax liens for the interest and penalty? The reason it's worth bothering with it is that you can eventually, I don't recommend trying it at the beginning because it's high risk, but eventually you should be able to acquire properties for how much depends on the state, but my course focuses in Arizona. In Arizona, you should be able to acquire property for the cost of 6 years worth of back taxes and interest, or not even interest if you buy at the beginning. Well, you get 2 years worth of interest. So for 6 years worth of property taxes and the foreclosure cost, which is about $3,000, you may be able to acquire a property. And that's where, if you manage to do that, it's not easy, but if you manage to do that, that's where tax liens can be a better option than investing in discounted mortgages. Now in this course, in a one-on-one course, I won't teach you how to acquire property. I'll teach you how to go after the interest, because it's much easier. It's a much easier thing to get started with. But in the spirit of begin with the end in mind, I'm going to tell you, without giving you the details, about 2 properties whose tax liens I bought. I bought the tax liens last year, and the redemption period is going to expire in a few weeks, 5 to 6 weeks. Now, don't worry if you don't know what the redemption period is, because I haven't covered that yet. But basically, it means that in 5 to 6 weeks, if they haven't redeemed the tax lien yet, it means if they haven't called the county and paid off about 5 years worth of taxes, plus interest and a couple of fees, then I'll be able to hand the file over to my attorney and ask him to start the foreclosure process. And if the foreclosure itself will take about 6 months, and during those 6 months they can still redeem, which means they can still pay off the back taxes and keep their house. But if they don't, for any reason, then I'll end up getting a title to the house. So there are, as of now, as of Monday, January 8th, 2024, there are 2 houses in Arizona for which whose liens I own, whose redemption period will expire in 5 to 6 weeks. And what was I going to say? Yes, and that I'm hoping to acquire. Now, the probability of acquiring them is still low. I don't know why they haven't redeemed. I bought a tax lien sight unseen, which is basically risky. I'll cover the pros and cons in future lectures. I bought tax lien sight unseen. I just did the due diligence online. I looked at Google Maps and stuff like that, and Googled the addresses. I bought them last year. Now in Arizona, the redemption period is 3 years, but there are ways of buying liens. I'll cover that in a more advanced course, or maybe later in this course, how you can shorten that. There are ways to buy liens where you don't have to actually wait the whole 3 years. You can wait. Sometimes, for some liens, you don't have to wait at all. For some, you can wait a year, for some 2 years. I'll go into more details, either later in this course or in future courses. Since I'm trying to acquire the houses, and I'll keep the actual details confidential, I'm just going to refer to these houses as small house and big house, because that's what they are. One is small, I don't remember what square footage is. One is really big. And then I'm going to refer to the owners as Small John and Big John. So Small John is the owner of the small house. Big John is the owner of the big house. The reason I'm keeping this confidential is there are ways to make money in tax liens without actually buying the liens, and that is to find out about people who haven't redeemed their tax liens, and they are very afraid of doing that, and whose redemption period have expired. And then, while the lien holder is foreclosing, is to beat him to the punch and contact the owners or their heirs if the owner is dead, and buy the property directly from the owners or their heirs. So when I said when I said that when I start the foreclosure process, if I start the foreclosure process, which will last 6 months, I said if the owners don't redeem, I end up having the deed to the house. Technically that's true, but it doesn't. One risk I'm facing is that an investor finds out about the foreclosure, which is a public thing. Foreclosure are public domains. So I can find about them in the courthouse, and then beat me to the punch, contact the owners, and buy the house cheap, and then redeem the tax lien. So that's why I'm going to keep them confidential. I'm just going to, all I'm going to tell you is that they're in Arizona. One is a big house, one is a small house, and I'm going to refer to the owners as Big John and Small John. Now, before I go further, let me give you the homework for today. Like I said, the homework is much more important than what I'm going to say in these videos. One thing I said in the previous video is that I believe the best way to learn about tax liens investing, if you are new, is to earmark $10,000 of real money and invest that money, and then see over a 4-year cycle whether you make money or whether you lose money, and see what you can learn from that process. I said also you could do it with paper money, which means you can just take a spreadsheet or a Word document, write down $10,000, and then look at existing auctions, whether online or in person, keep notes of which liens you could buy, and then see over the 4 years how much money you would have made or lost from those liens. It doesn't, in my opinion, again, I mean, I'm not your advisor, you do what you want and you are responsible for any losses that you incur. I don't take no responsibility for that. But in my opinion, it's you will learn more if you use real money than paper money. You may have had experience playing poker for zero money or playing poker for pennies, and you may have noticed that you pay more attention when you play for pennies than when you play for no money. Now, $10,000 is not pennies, and if you are afraid, whenever you start a new business thing, or either investing or business, and put some money, you always run the risk of losing that money. And if the thought of losing $10,000 scares you, I'm gonna recommend 2 books for you to read. Because there was a time where I was scared at the thought of losing money in a business or investment deal. I'm no longer scared. That was over 20 years ago. Since then I have lost a lot of money in many deals. I have made a lot of money in many deals. On balance, I have netted a lot of money in my investments, but I've also lost in many. And there are 2 books that helped me overcome the fear of losing money. They are from Robert Kiyosaki. You probably heard of them. Rich Dad, Poor Dad, and Cash Flow Quadrant. Rich Dad, Poor Dad is a much more famous book, but I actually like Cash Flow Quadrant much more. But the homework for today, for this lecture, is to just read Rich Dad, Poor Dad. I don't endorse everything he says in that book. There's a lot of crap in it. In fact, if you wanted to write a book, but you don't know what to write about, a very useful book to write would be called, and I would have written this myself if I had too much time on my hands, I would have written a book called Kiyosaki Without the Bullshit. Basically, the idea is to count how many words are in Rich Dad, Poor Dad, and Cash Flow Quadrants. There must be a way to count that automatically these days using Kindle and some software. I don't know how to do it, but I'm sure there must be a way. Count how many words, and then write a book titled Kiyosaki Without the Bullshit, where you put all the good stuff, good substance that's in these 2 books, Rich Dad, Poor Dad, and Cash Flow Quadrants, but you say it in half the words that he does. That would be a much more valuable book than these 2, but nobody has done that so far, so read these 2 books. Actually, for the homework for this time, it's just to read Rich Dad, Poor Dad. Next time, I'll give you the homework to read Cash Flow Quadrant. So for now, just read Rich Dad, Poor Dad, and put in your comments what do you think about the book. Depending on how much experience you have, you may spot the bullshit, in it, and then there is a lot of repetition that you would spot whether or not you have any experience. But put your opinion on, about reach that board that in the comments for this section. So that's your homework. So yeah, that's the most important thing you get from this lecture is the homework. Now I just wanted to show you what life can be like for investing in tax liens. So today, for the next day, I'm just going to show you myself trying to write. I told you about these two owners who haven't redeemed their tax liens yet in Arizona. If and when I hand these two files or one of these two files to my attorney, the first thing he will do is probably send them a 30-day notice. I say probably because the law requires it for them to be sent 30-day notice. I'm going to prepare 30-day notice now to send them myself, just to see whether they reply, either they call me or they redeem their liens, so I don't have to hand it to the owner. And there are a lot of things to learn that you could potentially learn by contacting them yourself without using an attorney first, even if you have to use an attorney later. For example, if they redeem, I'd like to talk to them, to these owners, see why they haven't paid their taxes. There are things to learn about these specific properties. There are also things to learn about why people don't pay their property taxes for 5 years. These two owners, Big John and Small John and Big John, let me call them Little John and Big John. Little John sounds better than Small John. So Little John and Big John, they haven't paid their 2018 property taxes. Actually, one of them paid 2019, I don't remember which one, but one of them hasn't, and then they haven't paid 2020, they haven't paid 2023, they haven't paid 2024 are not due yet. The reason I might be able to start foreclosing in 5 to 6 weeks, or my attorney would be able to start foreclosing on my behalf, is the 2018 taxes. So this is in Arizona. So because they haven't paid 2018 taxes, the county sold the lien on their property in the year no, they haven't paid 2019 taxes. Yeah, they paid 2018. They haven't paid 2019, 2020, 2021, 2022, 2023. Because they haven't paid 2019 taxes, a lien on their property was sold in the year 2021, which started the redemption period. So in February 2021, which will end in February 2024. Right now it's Monday, January 8th, 2024. Now, I didn't actually buy the liens in 2021. I bought them last year, 2023. That's because some counties in Arizona are known as single certificate counties. And if the buyer of the lien, whoever bought those liens in 2021, didn't subtax the 2022 or 2023 taxes, then those liens are put back in auction. And that's how I bought them in 2023. And the county is a single certificate county, which means I'm the only one who owns a tax lien on that property. That's not the case in all counties in Arizona. I don't want to explain much about that because it's advanced stuff, and this is for a future course. But that's how I may be able to, my lawyer may be able to start foreclosing in 2024. So before my lawyer sends them 30-day notice, I want to send them the 30-day notice myself. I learned how to do it, and then I'll give them my phone number, tell them to contact me if they want to sell the property, or if they want to keep it, to call the county treasurer and redeem it. So this is basically the substance about what I have to say today. And I'm gonna, for the next 30 minutes, you can just watch me work, see what a day, or what an hour, or what a half an hour in a tax investor's life can be like. And if I think of anything interesting in the meantime, I'll say it to you. make sure you grab a pen and paper and write down Robert Kiyosaki, Rich Dad Poor Dad. You need to read this book if you haven't already, especially. It's probably useful, even though there's not much meat in it. But in my case, it helped me overcome either that or the next one. It helped me overcome the fear of losing money. And if you are too lazy to read the book, let me just tell you two sentences in one of those books that made me overcome the fear of losing money. He said that Kiyosaki, in one of those books, said that he has never met a rich person who hasn't lost money in an investment deal, but he has met a lot of poor people who have never lost money in an investment deal. So this is kind of what did it for me. This is good food for thought. Unless you, if you want to do anything that's more complicated than putting your money in a bank CD, then no matter, you can do a lot of due diligence to reduce the probability of losing money, but there's really, I don't know of any way of making sure you don't lose money in a deal, because you never know what you are getting yourself into. For example, since we're talking about tax certificate, some owner for some reason decided to not to pay taxes for 5 years on the house, and you don't know. I don't know the reason why. For example, telling you about this Little John and Big John. As of today, I never talked to them. I never seen the house in person, which is risky, but that's a risk I'm willing to take. I plan to go see the house in person next month. And yeah, you don't know. They know more about their house than I do, so maybe there's a good reason not to pay on tax. Maybe there's a good reason they think that the house is worthless. And in taxing certificates, for reasons that you will see down the road, you don't have much time to do due diligence for a property, because the county publishes, depending on the county, either thousands or sometimes tens of thousands of parcel IDs that they are going to sell, whose deed are going to sell, and they publish that 2 weeks, 2 to 3 weeks before the auction. So you have these thousands to tens of thousands of properties among which to choose liens, and you only have a couple of weeks to do it. So there's limited amount of diligence that you can do. So as of today, I still don't know why they haven't paid the property taxes. I'm hoping it's because of a problem with the owner, it's not a problem with the property, but it can be a problem with the property. And if you've done your homework for the first lecture, you see all these people who lost money, I suspect because they bought liens where the owners had good reason to stop paying property taxes on their property. So yeah, so for the next 25 minutes or so, you just watch me work. But if I think of some idea, something comes to mind, I'll tell you about it. I don't prepare these lectures. Like I said earlier in the first video, there will be 29 lectures that are neither prepared nor scripted, where I just talk to the camera, and then a 30th lecture where I would prepare it as if I was teaching a college course and put in the notes what you want to see. I have my own ideas about what to show, but I may take into account what you suggest you want to see. So now you will see, I will not show you my computer screen because the information, like I said, is confidential, but you can see this is my laptop. Hopefully you won't be able to read what's in it, even though you probably could do it with some image processing software. So I'm going to prepare mailings to send to mail tomorrow, January 9th. You make sure you can't read that stuff. Yeah, you shouldn't be able to read this. I had already written this letter. I'm just trying to print it right now. I don't know. Maybe I'm using the wrong printer. And go check the other printer. I'll be back in a few minutes. Yep, the letter went to a different printer. As you can see, and this is not just today, most of the work I do taxing certificate is actually done in my home office. I do very little work on the field. You will see next month in February, I'll be on the field, but right now and most of the year, I'm in my home office. Well, it's not my home office. It's not my house. I'm house and dog sitting right now. That's why I'm trying to find my way around these printers. So I'm in somebody else's house. Okay, can't find the printer, but I connect it manually. Notice I haven't told you yet what tax lien certificate is. I'll tell you at the later lecture. Even though I kind of touched on it a little bit today, but we'll go through it in more detail at a different lecture. Okay, I think this is the printer cable. For some reason it's not finding it wirelessly. Yep. So back to the point of begin with the end in mind, what I'm hoping for you is that within 10 years of today, actually not within less than 10 years, by 2030, by the end of this decade, you should be in a position where you will be sending notices to homeowners whose redemption period is about to expire and telling them of your intention to foreclose. And for them not to foreclose and for you to acquire the property and for the property to be worth it. Which means to be worth much more than 6 years of property taxes plus foreclosure costs. I said 6 years because it's going to, after the 5 years that they haven't paid property taxes, it will take you about 6 months to foreclose, and during that time you have to pay the current year property taxes too. So it adds up to 6 minimum. Okay. So I just printed notice, 30-day notice. So basically this notice is going to be sent tomorrow, Tuesday, January 9th, and I'm giving them notice that on or after March 1st, 2024, I plan to start a foreclosure action on their property. And if they want to give the property to call the county treasurer, and I'm giving the phone number of the county treasurer, or if they don't intend to redeem the tax lien or have no interest in the property, to give me a call. If they call me, I'll see if I can buy the property for cheap. So I printed it, I signed it. Next thing I need to do is to scan it to keep a copy for me, and I'll send them. The law requires to send them copy certified. Well, not. I don't know exactly what the law requires, but what I do and what I believe lawyers do is send them at least 2 copies: one certified mail, one first-class mail. And I contacted these owners in July, see if they would redeem in advance. And the Big John, who owns the big property, hasn't picked up the certified mail. I don't know what happened to the first class letter, but the certified hasn't been picked up and was returned to me. And so besides certified and first class, even though I don't think it's required by law, and I don't think lawyers do it, I will also send Big John. I will send Big John another copy by FedEx Express Saver, the one that takes, I think, 3 days to deliver. So one thing I'm gonna do is scan. I'm thinking. Yeah, I'm going to print a few more copies. I don't know whether I'm supposed to put original signature on the letters. or whether I can scan it and then print copies after I have already signed it. I already signed this one, so I'm going to scan it. I'm going to print other copies so that I can have original signature. So let me first print 2 more copies. And then I'll sign all 3, then I will scan all 3. Okay, this time it's gone to the right printer. I don't have to walk to the other home office. Let's try this again. Okay. Initially it's printed them, but somebody had put paper in there. It wasn't blank paper. So I have to redo them. And now that I'm redoing them, it's not working. I don't know why. Gonna shut it down and then restart it. Okay, I'm gonna use the other printer. I'll be back in a minute. Okay, I have my 3 copies, one for certified mail, one for first class mail, one for FedEx. And the reason I'm FedExing is because I tried to contact this owner. Actually, I'm going to stop calling him Big John. I'm going to call her Big Jane because it's actually a woman. So that's why you won't be confused when I say her, talking about Big John. So there is Little John and Big Jane. Little John owns small house in Arizona. Big Jane owns a big house in Arizona. So I printed 3 copies, one for first class mail, certified mail, FedEx. And again, the reason FedEx is because when I tried to contact her in July, she hasn't picked up the certified mail. The post office left a notice and then waited 2 or 3 weeks and then sent the certified mail back to me. So I'm gonna send the FedEx. FedEx will just leave it at the door. It makes it more likely for her to have it. And since I plan to go there in person, I'm gonna print a few more copies to take with me in person. That way I leave under the door. If I find the mailbox, I will leave one in the mailbox. I will leave whatever I find. So I'm gonna print 3 more copies for me to take in person. I'm gonna sign these in the mail. So I'm putting original signatures on all 3, and I'm going to scan them. I will get the ones that I'm going to take by hand. Be back in a minute. Sign those. Where's my pen? Yeah, I'm going to sign those that I will take by hand because I'll be in a hotel when I'm in Arizona part of the time. So I won't have easy access to printers. Scanners and stuff like that. So trying to get ready for the trip. The trip to Arizona will be sometime between January 27th and January 31st. It's both to invest in this year's tax certificates, but also to take care of the ones I bought in past auctions. So these three, they are identical except for the signature, but I'm gonna scan all. So anyway, you never know at some point if I need to use them as exhibit in the foreclosure lawsuit, and I want to make sure I show the right copy I sent, not the one with different signature. Let's hope the scanner works better than the printer. So this one, the first one will be the certified. This printer crap is one of the reasons I wish I had an assistant working for me, but for several reasons which are beyond the scope of this course, I don't use an assistant. But if you have no qualms about using an assistant, or if you insist for other things, you may want to consider eventually getting one. At the beginning, do everything yourself so that you learn how to do it. But if you start doing this in volume, it helps to have an assistant. Okay, 2 more minutes and I will stop recording. But basically what I'm gonna do for the next hour after I stop recording is basically what I just described. Scan the stuff, put the stuff in envelopes, prepare to mail them, and then mail them tomorrow. Don't forget the homework. Read Rich Dad, Poor Dad by Robert Kiyosaki. And then put in the comments what you think about the book, what you like, what you didn't like, stuff like that. It has been more than 20 years since I read it, so I can't comment other than for the fact that I remember it's one of his books that got me over the fear of losing money, thanks to which I made a lot of money since then, in the last 20 years. Not in tax liens, by the way. I made money in other things. I will link to other channels where I will teach some other stuff. Tax liens is more so far. I've been using like lottery to helping to acquire a house. For back taxes, probability of doing that is very low, so you have to do it over several years, over at least 10 years, to know whether it's working for you or not. Maybe I need MFC software, which I don't have. Download MFC L2710. Okay, I'm gonna end it here. So basically what I'm gonna do for the rest of the day, or at least for the next hour after that I'm busy with other things, is prepare the mailings, which I will send tomorrow, which are identical to what my lawyer would send if and when I turn this over to him in March. So see you at the third lecture. Don't forget to like, share, and subscribe.